Good morning, everybody, and welcome to this week's weekly wrap. It is the 1st of May, 2026. I'm Luke Harris, and I'm joined by three handsome fellas on the screen, Pat, Anthony, and Mirko. Gentlemen, how are we all? Mirko, I'll go to you first. How are you going, my friend? Welcome back.
Yeah, going all right, mate. Going okay, and I must admit, Monday I've never been so happy to come into the office for the distraction. Let me tell you.
Yeah, I could imagine, mate. I can imagine. You okay?
Yeah, all good. Got wonderful support around me, including you three blokes. So it's all it makes life a little bit easier.
Yeah, no, I can imagine, man. I can imagine, mate. Just and from all our clients as well, the amount of phone calls we've received, and I'm sure Pat and Anthony will attest to this as well. The amount of phone calls that have come through where clients have just said, "Let Mirko know we're thinking of him and our loves with him," and all that stuff is really nice. So to all our clients, thank you as always. It's always lovely to do that. Now, Mirko, I guess from that point, oh, actually, no, before me being rude, Pat, how are you, mate? You good?
Very well, yes. Yep.
That's the
Have a
way,
good
mate.
week.
That's the way. You were a bit confident last week with the Bombers and Collingwood, mate. I think we got spanked, buddy.
Well, I'm confident against Brisbane this week, so that probably shows you what it's like.
Oh Jesus, you are nuts. You are nuts. And Anthony, how are you, buddy?
I'm very well, Luke.
That's the way. I dare say you would have been happy about the Bombers being spanked.
Yeah, we won't talk footy because Geelong was just as bad as Essendon, so we're just ready to play you so we can rack up a win.
Thanks, buddy. Thanks, buddy. All right, Nick, over to you, mate, with the markets. How are we going, mate?
Okay, so it's been all over the shop, and definitely a tale of which part of the world that you live in and which sector happens to dominate your particular markets. Now, in the US, as we know, the Magnificent Seven stocks, the tech sector is extremely prominent in across most of the indexes over there, and as a result of some pretty solid reporting overnight, where a lot of uh, the big players actually reported market beats. They actually see themselves in positive territory this week. So, in the US, for example, the Nasdaq's up in the green this week, up about what do we got? Zero point 0.2. The S&P 500 is up zero point 0.6 for the week. The All Ords in Australia, we're actually on a 7-day losing streak, unfortunately. So I didn't do my numbers last week. I just had a quick look. Yeah, so yesterday was 7 days in a row that we're in the red. So we're actually off 3.2% over the last 7 days. Although having said that, today is looking like a very positive day. I'd be very surprised if we didn't claw half of that back by the end of trading today on Friday. So, look, we don't have the benefits of the tech sector sort of carrying us through. In Australia, probably explains why. We also had some data points come out this week. Our inflation numbers jumped, and I'm sure we'll talk about that a bit later as well, to 4.6% for March. So looking ugly there. Market is now factoring in 2, if not 3 rate rises this year, which doesn't bode well for markets that don't like that. So watch this space.
Mm. Just thinking about that at the moment and calling out the inflation rate, Mirko. Inflation's a function of demand or a function of circumstance. And at the moment, it's probably fair to say, and Pat, Anthony, I guess from your point of view, it's not like we're seeing a massive amount of demand out there. Like there are businesses struggling, speaking to consumers, confidence is low and all that kind of stuff. I guess just thinking about it, is it fair to be wanting to raise interest rates, or is it right to be wanting to raise interest rates when circumstances are actually outside of the consumer's control? So, Mirko, I
Yeah,
guess
look,
going to
I
you.
mean, it's never going to be considered to be fair on people that are holding debt and trying to pay their mortgages, yeah. And cost of living is increasing the whole time. But having said that, we know that one of the mandates for a central bank is to try and keep inflation in check, and those numbers aren't pretty. And yes, I know that I think overnight the price per US per barrel oil is at $125, so it doesn't look flash. I did notice quite a few servos are back above $2 again. Didn't take them very long to do that. So, when you have that sort of situation, when you have the, inflation rate jump to 4.6%, it's not a pretty figure. And even if you look at the RBA's preferred measure of inflation, is the one where they actually cut out the price of fuel. That is still at about 3.5%, so sort of way above their target band. So I'm not sure that they're going to hang back without hitting us with some rate rises, unfortunately, because they're trying to take the so-called heat out of the economy. And then, the question becomes, where does this heat come from? I don't actually think it's necessarily coming from the pockets that we suspect it is. I think it's more, this is the government doesn't really get a mention as to how much money is being spent. I think there's a lot to do with that as well.
Yeah, I do agree with that. Pat, what's your view, mate? Do you think rates will go up?
Yeah, unfortunately I do. And like Mirko touched on that, a lot of this has come down to government spending. You even see state governments now coming up to election, pouring heaps of money back into the pockets of the voters. So the RBA can't sit there and say it's got nothing to do with government spending when everyone's feeling the pain, but the government keeps spending and telling the individual to stop spending. So
it's a bit of a problem. Yeah, it's a bit of a problem when you're borrowing money to spend more money, I dare say.
Correct.
Yeah, no, fair point too. Anthony, you're of the view that interest rates are up as well?
100%.
Oh, God. All right. Well, you guys are depressing, so thank you for that. Thank you for that. Now, in news overnight, I guess from that point of view, the US have held their rates on hold as well, Mirko, from that end, which is interesting. But I want to focus on Jerome Powell. Jerome Powell stepped down as chair of the Federal Reserve, and this is something that Trump desperately wanted. He didn't want Jerome Powell to be the chair. And as suspected, Jerome Powell has stepped down, but he's not leaving. He's remaining on board. And he used part of the reasons for it is he doesn't like the way the administration is challenging the independence of the board. And he doesn't like the fact that the way the administration is undertaking actions against the Federal Reserve from that point of view. Are you surprised by Jerome Powell's decision? And do you think it's probably a good decision to have somebody who isn't a sycophant on the board?
Yeah, look, I must say I'm not surprised. I mean, the only way that he can, really defend himself from a position of strength is if he does actually stay on as a Fed governor, which he certainly intends to do. That'll cause some friction there with the new elect Kevin Walsh coming in. But I look at the whole composition of that Federal Reserve Board now, and one of the things that didn't get a lot of highlighting this time around when they said that they were going to keep rates on hold was that there were sort of 3 dissents from federal officials on this vote this time around. So it tells me that all is not sort of all for one and agreeance on that board, which there's almost equal weight now for this current bias towards future rate cuts in the US, but there's also an argument for the same way we've got in Australia, if their inflation keeps going up, that it could go the other way. So I think that you've got a board with very mixed messages. The independence of that board from the government has been called into question many a time, and unfortunately, I don't think that cloud's going to disappear anytime soon.
Yeah, no, fair point. All right, gentlemen. In Australia here, we're coming up to federal budget time. So the 12th of May, which is Tuesday week, the federal budget will be handed down. And this is one of those rare tough budgets where, normally the government is, tiptoeing around the edges and so on. But we have a government which is speaking a very big game. So they're talking about massive spending cuts, and we've seen it. We've heard it. Mark Butler came out last week on the NDIS. And we've also seen, or we've heard, or ideas are being floated about revenue raising, i.e. tax changes, particularly in the areas of capital gain and in the areas of negative gearing from that point of view, all under the guise of intergenerational wealth. So, Pat, I guess a question for you, my friend. Thinking about what the government is proposing, do you think they're going to be brave on the capital gains piece and negative gearing? And if so, what do you think they might do?
I'm not sure. Ask Bill Shorten how this went last time, because this really bit that the Labor government at that time, and they basically went to an election with taking away negative gearing and franking credits, and it didn't pose well. So, is this the other bite of the cherry? Are they going to try it again? I'm not sure, but if they're talking about intergenerational wealth, this is one way they can tackle that with these reforms. But yeah, they're talking about grandfathering these as well, which is, are they grandfathering anyone that bought it, or are they just grandfathering anyone who's going to sell it? So that's going to be a big question as well. But yeah, I'm still unsure how they're going to push this through, because it's a very big tax reform.
Yeah, it would be. It would be. Anthony, thinking about what Pat just said there from a grandfathering point of view, if they were to grandfather, so let's say the capital gain changes do come in, and we're working off a different system, and they introduce a concept of grandfathering where anyone who owned the asset prior to this date would have one way of calculation versus anyone who buys an asset after this date would then be another way of calculation. If you grandfather, doesn't that bring into question or call BS on the intergenerational piece?
Well, it does, but it's no different to when capital gains tax was introduced in 1985, when now you've got pre-CGT and post-CGT assets. So it effectively is just putting another line in the sand to say, okay, up to budget date, if they go down that path. But to me, you got to think about it in terms of the turnover of assets. And if you take a property as an example, anything that's currently owned now falls under a grandfathering regime. I don't see that the impact in what they're trying to do from a government perspective in intergenerational wealth that transfer, or being able to get younger people into the housing market, is going to fix it by grandfathering existing assets owned. So I suspect they have to be quite attacking on this in terms of everything's included. Hence why my view is that I think they'll probably just reduce the rate, and there might be some scope in terms of older assets existing owned might have a slightly different rate to. So they might go down to a 25% discount, for example, whereas anything owned as of budget night going forward might be scrapped completely. So I don't think it'll be a case of existing stays for grandfathering versus a zero. I think there'll be something in between. Then the other thing is indexation. Now, indexation was removed in 2000, I think.
Yeah, 2001, I think it was.
Yeah. So, having been a tax agent in that time, it was great that it was removed. So, but if that's the concession that they're going to provide, all well and good. And if indexation is linked to inflation at the moment, then yeah, all well and good, because your property price your cost base will be going up anyway.
Yeah. Mirko, just thinking about that, when you go and make tax changes and all that kind of stuff, that's a revenue grab. All right, that's the point of this. You're wanting to collect more monies and all that kind of stuff, which is fine. And the argument is, well, what we want to do is we want to take the heat out of the market, because the only people who can buy property are your older people from that point of view, which is keeping the younger people out of the market. They can't buy a house. Thinking it through logically, however, shouldn't there be incentives, however, to build new homes? So shouldn't the capital gain perhaps be, should the capital gain discount, for example, apply to new home builds and to that sort of incentive to force more of that, rather than speculating on buying an existing property and then flipping that existing property from that point of view?
So that's a very good question, and I think that there's actually a few murmurs about that. It hasn't been as loud as I thought it would be.
Yeah.
That would not surprise me one iota. The only concern I have with that is that what does that fuel the next sort of housing price problem, right? So we've all seen these incentives before. So I don't know if you remember when there were like first home buyer grants that went from, I think it doesn't really matter, 550 grand to $600,000, and all of a sudden, no surprises, every apartment was being sold for 595. That was 550 like a month earlier. So got to be really careful. Be careful what you wish for there. So Look, there's actually an interesting piece in the Fin Review today about potential winners here could be super funds if they don't get touched from a CGT point of view, and they're still offered the discount. So, I'm looking forward to seeing what the actual policy is, but there's definitely going to be some changes because you don't hear this much noise coming into a budget with unless something's actually going to happen. And Anthony, I was because I'm such a nerd and aspiring tax agent myself. I dusted off the old books of the CPI indexing and went, I can't believe we had to do these calculations. We could be, trying to dig up the old from the Australian Bureau of Statistics, the old CPI at acquisition previous quarter versus the current CPI quarter indexes to do these calculations. So I reckon there's going to be like half the industry will retire because they just refuse to go back to their therapist to have to deal with this.
Yeah, no, look, I do remember those calculations. They were a bit of a pain in the backside. I think, thinking about all these changes and whatever you've got to be careful of, there's two things that probably come to my mind straight away is that you can have all these incentives into the system, for example, and the problem that we've got is we've got an undersupply of homes, but there's also an undersupply of trades. So the reality is you go and put all this stuff in there, like, the plumbers are charging, electricians are charging whatever they're charging, and so they should. But the reality there is we're not producing these kids coming through with trade degrees and all that kind of stuff. So the problem that you've got is who builds these homes? Who does all these things? So that's the first issue.
That's okay, guys. We've got free TAFE courses for people that are never going to get jobs out of those courses. So, and while we shut down all the tech schools, biggest mistake we ever made.
Absolutely. And I think the other thing there too, and on your point, Pat, is the bravery. You think about what Bill Shorten did. I think one thing Bill Shorten did, he was very front of centre and on the front foot and made it a class warfare. So there was an argument around class and he did attack that. And I think most Australians called BS on that because most Australians said, actually, no, we don't like that sort of behaviour and we don't want that to occur. I think the government on this situation has been pretty clever in the sense that they've let the murmurs. So all the discussions that we're having are based on rumours. The government actually hasn't said anything. So it's been very different to a Bill Shorten. So, is it brave? I think next Tuesday night it's going to be really interesting. So it's going to be a bit of fun from that point of view. Since we are talking about budgets and all that kind of stuff, heaven forbid we forget that next week, I think, Mirko, you told me, is the Victorian budget. Mate, how good is this? We're going to have a budget and we have no cash. So please explain to me how a budget like this could work, gentlemen. Anyone's got an idea?
Don't let being broke, miss the opportunity to hand out a budget.
Accounting 101, Luke, in a budget, you can have a surplus or a deficit. So a budget doesn't imply that there's cash.
Okay. Pat, how are the potholes near your place?
Well, I was just going to say, you spend all the money before you release the budget. And she's doing a very good job at finding a lot of money before this budget's released. So, $400 million for the train, free travel, another $1 billion for potholes, and then everyone's getting a discount on their rego. So she's going all right.
I've actually cut some numbers on this, guys. I've got. Along with some of those that Pat has mentioned, we've dusted 400 million on free and discounted public transport, 460 million on skills and training. I think that's the free TAFE courses, 860 mil on social housing, 100 mil on the CFA authority trucks, 217 on forest fighting equipment, 305 to redevelop Dandy Hospital, 250 mil maternity services, Western Suburbs. This is the one that caught my eye. The net debt for Victoria is tipped to reach $192 billion in 28-29. So that will leave us with an interest bill of $11 billion a year. And because I'm a nerd, I actually calculated that. That's $29 million a day in interest we'll be paying. That's assuming that we don't have too many rate rises. That's a pretty ugly figure, guys. So everyone that's, but it's okay. It's not your money. It's all good.
Nothing to see here, my friends. Nothing to see. Look, it is a concern. It's a worry when you kind of sit back and go, we're just spending money and we're just borrowing more money to spend more money, which is a real concern. And when you think about that interest bill, it is eye-watering. I guess the question there is, the thing that plays in the back of my mind is we're producing, like at this moment in time, a lot of nurses, a lot of guys, paramedics, and so on, who are studying and doing all the right things from that point of view. They're also having the benefit of the discounted degrees as well, which is good. And they're coming out and they don't have jobs. Yet we have hospital beds which are empty. And the reason why we have hospital beds which are empty is because we can't get the nurses to employ, and the nurses are available, but we actually don't have the monies to pay them. So, it feels like a Monty Python skit to a certain degree here in Victoria. And I've got to give the Labor Party credit. The way they can come up and front up the media each day and give you there's nothing to see here, there's no problem. And I've got to give our media credit too. The fact that no one calls out this BS is beyond me, but clearly Victoria is a special case in question. So it's definitely challenging from that end. Let's talk about the Strait of Hormuz, or the Middle East issue. What are we now? We're 55 days in, I think, or 50 days into this issue. This was going to be a quick war. I think Trump declared victory on day one or day two, and yet we're pretty much still down the process here. Do we see this getting resolved anytime soon, or is this something that we're going to just see continue on? And what does this mean from a global economic perspective, I guess? Does that mean we could potentially dip into a recession if we don't resolve this sooner than later? Mirko?
Yeah, look, this is a real concern, and this on again, off again, open again, closed again rhetoric, no one's really buying into that. And what we're actually starting to see is the sort of trickle down effects of this. These ships are simply not getting through that strait, and the end punter is going to be the one that pays the price for this. And we've seen a very simple example in what I would argue is a very small economy, Australia. And have a look at what it's done to us. This is going to be a global phenomenon, and this is a real big problem.
Yeah. Interestingly, there were 12 boats, 12 Iranian boats that got through, tankers that got through the strait, and they all were going to India from that point of view. So it was interesting that from that point of view, the US actually allowed those to go through. So it's you're kind of sitting here going, well, what is this? Is the US kind of scared, or is it playing chicken with who it can actually upset and who it can't upset, which is an interesting one from that point. Pat, you speak to a lot of clients and all that kind of stuff, as we all do in the office. What are clients? What's the general observation from clients? Have they checked out on this issue? Or are they still heavily invested in it? Or
yeah, a bit of both actually. And I was listening to something the other day. They were saying for every day this war goes on, that plague puts the stress on the markets, and oil play a week. So if you're saying it's been 50 days, that's almost a year that we're not going to see any normalcy. So that old saying, a long drive through a short war, which is, I think this is what's going to happen.
Yeah. Look, I do worry about it, and I think for countries like Australia, it probably just it serves as a reminder. We can't fix what is an immediate problem now, clearly, but when this mess gets resolved, I think Australia needs to have a fundamentally big look at itself and go, well, what are we doing? What role are we playing, and how do we secure ourselves moving forward? Because the world is a very different world to what we were used to. Even from COVID through to now, the world has changed enormously. Anthony, from your perspective, when you look at what's going on from that end, and you're speaking to businesses clearly from a tax point of view and so on, are you noticing that businesses are having to, are they absorbing the costs, or are they actually going, we can't absorb anymore, we now need to pass on the costs to clients out there?
Yeah, I think in a lot of cases, it depends on the type of business and where most people are trying to pass it on for sure. But at some point, yeah, if you've had a good for a long time, then effectively you are absorbing some of it. I think there are particularly industries, probably stuff that we're a little not relying on in terms of our client base, but talking to other practitioners and contacts in the industry. Construction's under severe pressure. Building, transport and logistics, fuel, like it's obvious. But effectively, where does that end up? You're right, the end consumer is going to be the one paying, and hence why your inflation's heading in the wrong direction. So there is definitely pressure across business for sure.
Yeah, and I think the challenge there is, in a housing crisis where you might turn around and put incentives into the market so we can build more houses. You can see where that's going to end up. That's going to become the new NDIS, in theory, if we're not careful from that perspective. Now, gentlemen, there's 4 of us on the screen, and 3 of us I can attest aren't runners. So, and I won't point to those 3, but there's one of us who is a runner. And that person who runs, this week there was a marathon in London, Mirko, if I'm right, and we smashed the 2-hour zone, I think, and we came in at 1 hour and 59 to complete 42.2 kilometers. Is that right?
Yep, first time. I'm a bit of a weekend warrior. That and Luke always asks me the question, "What are you running from?" And I go, "I don't know, but it just sort of feels good anyway." But this is actually huge. So like the 2-hour mark has been sort of this mark that's never been broken in the marathon, and only it has been once, but it was under sort of not race conditions where there was sort of drafting and all sorts of stuff going on, but this was just a legitimate run. A Kenyan guy by the name of Sebastian Saw ran the marathon 1 hour 59 minutes and 30 seconds. And usually you don't get a mention if you finish second, but the guy that finished second, a chap from Ethiopia, Yomif Keleche, he only finished 11 seconds behind him. So he had 2 guys that actually ran under 2 hours, which is absolutely incredible. Adidas they were both wearing this new Adidas shoe, sells for about $700. I told my wife I've ordered 4 pairs already, and she just said, "You're an idiot." I put this into perspective. If I had started at the same time as these 2 guys at the start line, I would have been going through the halfway mark. They would have been 21 kilometers ahead of me at the as they were crossing the line. It's just mind-boggling the pace these guys ran. So kudos to those. Whoever said it couldn't be done, well, it has been done. It's been done by 2 people. So amazing result.
So Mick, knowing that you're the stats man, average pace?
Sub 3 minute kilometers.
I think
what's that in terms of speed?
As in pace, you're running at about 20 kilometers an hour, and just over 20 k's an hour.
42 kilometers.
Yeah.
Yeah. So to give you an idea, I think Anthony came in at 2 minutes and 46 seconds per K, or somewhere around there. During the week, I thought I'm going to do a bit of a run and had a bit of a sprint from that point of view. I lasted 53 meters before my tank blew. So I lasted that, and I'm going that these guys ran at that pace for 42.2 kilometers. It is mind-blowing in terms of the stupidity of how significant this is.
To put it in perspective, I did a marathon many, many, many years ago, and the cutoff for when they actually tap you on the shoulder and say you can't do the course anymore was 4 hours and 30 minutes. I did mine in 4 hours 20 minutes. So I got a little motivation towards the end to push out, so I didn't have to run laps around the MCG.
Oh wow! Okay, when did you complete that, Pat?
Probably about 8 years ago now.
Okay. Are you harbouring any hopes to do it again?
I haven't ran since.
Fair enough too. Gentlemen, I believe the weather's not going to be. The weather's going to be quite nice this weekend. Is that right? Am I right in hearing that?
I think Saturday nice, Sunday maybe a bit of rain.
Bit of rain on Sunday. Okay. All right. Well, look, for all our clients out there, make sure you get out on the Saturday and enjoy that. And Sunday, if it means curling up with a good book and just sitting there and over a glass of wine, that's not a bad way to do it. Gentlemen, have you got anything exciting planned? Mick, anything exciting this week, or just a quiet one for you, mate?
Still recovering, very quiet for me.
Fair enough too. What about you, Pat? Anything exciting?
Maybe try and break that marathon record.
Fair enough too. Anthony, the bowls are all over for you, yeah, mate? You're done for the season?
Bowls is over, but I'll be happily watching Geelong beat North Melbourne, Mick.
Oh, there you go.
We might have to have a bet. And a good mate of mine is having his first amateur boxing fight on Saturday night, so I'll be off to watch that. That'll be exciting.
Nice.
Well, you get out there and hit some heads, mate. So just enjoy that. Yes. All right. Well, to our wonderful team here at Innate Wealth, as always, thank you very much for all the work that you do. We much appreciate that. And to all our clients out there, thank you as always for all your support and all your love and all your care. As always, if there's anything you need, we're here. Give us a call. Until next week, take care. All the very best. Cheers, guys.
So yeah.
See you later.